It's time to look at small caps again. We've seen, obviously, for the past 5-6 months, a very strong rally in momentum stocks, which we cautiously look at here through the lens of, hey, it could continue, but it's certainly starting to show early signs of cracking a little bit. And the question, of course, is that going to lead to a broadening of the rally? And so I want to revisit small caps, because I do think there could be some relative strength there. I also want to warn that I don't think it's going to be new all-time highs in small caps, but relative strength as we see a broadening of the rally. The way we look at it, we're going to very simply look at the IWM. This is the Russell 2000 small cap ETF. And if we look at the IWM, we can see we've essentially had a trading range is, I guess, the simplest way of putting it. So the trading range largely from call it, the mid 160s to about the low 200s. If we were to break above 208, it's kind of my level to watch. It's not impossible to think that we might get into the 220 to 230 range. So that's the level I'm really watching for. I need to see a close above 208. That's been sort of the resistance level. But I think if we can get that, so to me it's premature here. I'd rather bite this on a potential breakout attempt as opposed to on a pullback. But if we were to be able to get above 208, I do think there'll be 6 to 10% of upside in the Russell 2000. So that's kind of what I'm looking for. Relative strength, though, here really important. In fact, relative weakness. So it almost doesn't matter what we divide the Russell 2000 by, and we've warned about this for the past couple of months because there hasn't really been any relative strength just yet. It continues to be relative weakness. It's become a little bit less relatively weak. So this is the small caps IWM versus the S&P 500. And if we go into more extremes, IWM versus momentum stocks, we can use the MTUM ETF to compare those two. Again, there's really no relative strength at all to speak of. The only argument we could try to make is that maybe we're getting to the point where the relative weakness is getting exhausted, but that's about the only thing we can point at. So there's no speak of relative strength here, but I would argue, and this is why I come back to the absolute chart, that if the Russell 2000 were to get back to a point where the IW, excuse me, my cough is still in existence, as you can tell. Sorry, if we were to be able to get above 208, I would expect that to also come with relative strength. So 208, line in the sand, long story short. Now, one of the things I'll be watching very closely for is for algorithms, the Wall Street algorithms that we track so closely every single day here, to come back in and start giving us buy signals. I would expect that to happen if we were to start to see a move towards 208 and above, which would be further confirmation. And speaking of algorithms, that's exactly going to be the topic this week. We're going to show you exactly how we look at the world of Wall Street algorithms, how we can jump on the back of those strong moves. So if you've ever wondered, how can we potentially take advantage of big moves that happen on Wall Street when they start coming in and buying a lot, or when they're selling a lot, how can we find those moments? That's the topic this week in our special discussion. Make sure you sign up for that down below or on the next screen, and we look forward to seeing you there.